You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. How are you today? Look, it's another day in the markets. It is Thursday, and it's the end of the Amazon Prime Day deal days. So, look, Amazon itself, we're not seeing much move in the markets right now. Look, the VXX now still slipping here. Now down another 0.5% here. Bitcoin yesterday, we saw a major short get liquidated. But again, pullback. The markets are very, very nervous. Today, I'm going to bring in Kirk Spano from Bluemound Asset Management and fundamentaltrends.com as well. Kirk, how are you, man?
I'm good. How are you doing?
I'm very good, man. You're a busy guy. You got a lot going on.
I do. I run an investment firm and writing some investment letters. Just got back from the World Series of Poker. Did you know that you can lose in Las Vegas?
You know, I was told that Vegas was not built in a day. I think Chevy Chase told me that one time in a movie. Vegas. Listen, I'm going to put some of your stuff up here, who you are, and fundamentaltrends.com as well. But Kirk, you've been around this game a long time, and talk to me a little bit about what you're seeing in the markets based on what you've seen in the past.
Well, I think that there are a lot of false narratives out there that really are simplistic when it comes to the economic background, just the regime that we're in right now. And I think that the risk of a big rug pull is increasing. I don't think we're there yet, but I think it's going to be harder to grind out gains now for quite a while. Yeah. My baseline thesis coming into this year was that it would be a lot like 2018. If you take a look at the analog, it's like right there. If we have a correction into the end of the year or second half sometime, which I think we will, it could shape up a lot like that. I do think that the president's preoccupation with Jerome Powell is foreshadowing what's coming. I think that the next Fed chairman is going to be very, very loose, very, very accommodating. And between now and then, we will get an excuse or a reason, whichever way you want to look at it, a financial mini crisis or fear of a mini crisis or whatever the rhetoric comes out to be. But I think that next year rates drop a lot in the second half. And I think there's a very, very strong chance that we get quantitative easing because it's tough to see international markets supporting our debt any more than they already are. And not that they're going to dump, but we need another couple $1 trillion from around the world, and I don't think we're going to get it. So the only way for us to find that money is really going to be quantitative easing sometime in the second half of next year. Which means buy the dip, man. If we get a 20 or 30% correction, buy. Don't run for the hills when it happens. Take your preventive measures now, whatever that means for you, given your personal style.
Yeah, and I'm gonna talk about how to get a hold of you. Fundamentaltrends.com. It's right there on the bottom of Kirk Spano there. And listen, I've known Kirk a while now, and I can tell you that you and I have been in this game a long time. And when you look at the past and you try to emulate the future, and we know the past does not dictate the future. We get all that, and we got to say that sometimes. But have you found a time in your investing career that you feel is a lot like what's going on right now in the markets?
I think it's a mix. I think that there are 3 similar periods. I'm hoping that we end up with a fourth. There are clearly narratives driving 50, 60, 70 stocks in the market. When you take a look at, just certain stocks spike straight up, others like United Healthcare falls off a cliff. It's very narrative driven. Because we have twice as many traders as we did before COVID, when the market decides to turn, it can turn fast and hard. There is a dynamic that is built upon social media and trading rooms that really amplifies what used to happen 10 and 20 years ago that you remember, right? I mean, we remember when a short would come out and there'd be a report and, some money would move. But now, a hedge fund takes a position, they give that position to a trading room, the guys running the trading room give it to the people in the room, and then they all get on social media and they put a bunch of FUD out there.
Right.
Short and long. So the movements are sharper and faster, and I don't try to predict those. I don't try to get in on those. I just try to say, okay, I like these 30 companies, and if it gets up to a certain price on stupidity, I'll sell it. And if it gets down to a stupid price on different stupidity, I'll buy it. And I just wait for these prices to come to me. And it's worked. I'm not a great day-to-day trader, mainly because I don't do much of it. I used to. And I have found that I can grind out 30-ish percent, 35%, 40% if it's an up year, almost every year. There's some years where, you make 5 or 10 or 15 because it's just, you're in a bear market and you grind things out by selling options. But I do think the narrative-driven nature of this market is a lot like 1999.
Yeah.
I think the idea that, there's more M2 now, so it's got to go up. I think there's a misunderstanding about what's going on with M2. I don't think the level of sophistication for understanding what's going on there exists. I think most people don't understand what's going on with M2. I have a chart if you want to see it.
Yep.
And I think that 2018, because I don't think we're on the verge of a massive financial crisis. I just think we're going to have to breathe out here before we get money sprayed at us. But I think 2018 just keeps coming back to me that's what it reminds me of.
And you talked about not finding alpha, and you mentioned the stock analog devices ADI, and I pulled ADI up for you here. I think you're right. I think the problem is when we saw that capitulation just a few months ago, most of us the old school, we ended up buying because we love that, as you were saying, the putting out the FUD. We love that. That's when we picked it up, but. You're right. I can't seem to find alpha anywhere. I said it yesterday and the day before. I can't seem to find trading stocks that I really want. And now we're turning back to meme stocks again and alternative crypto, right?
Yeah. And I frankly hope that there's an altcoin rally
okay.
so that Bitcoin goes down and I can buy it back. I'll tell you what, I've been in and out of Bitcoin since 2016. I have some cold storage coins that I never trade, but I've been trading it since 2016 and I've been profitable on every trade. And I'm a position trader. I'll hold stuff for a year or two, but I got out of, I pretty semi-famously, right? Semi-internet famously gave an interview a few years back when Bitcoin was 52, 53, 54,000. And the guy that I interviewed, Dr. Sean Stein-Smith out in New York, he said, hey, Bitcoin's going to 100,000. I said, you're right, but it's going to go to 20,000 first, maybe 15,000. And he's like, really? I said, yeah. So we don't own it. We just sold it. We ran this last rally up to the top of 2021, sold it, got under 20,000. I started telling people, okay, start scaling in. We bought it under 20. We sold it at 99. When it went over 100 and then came back to 99, I sold it. And I probably should have bought it back in the 70s, and I didn't. So I'm looking for a redo, kind of like on the playground. And the altcoins, we bought Ethereum, a ton of it. I bought enough to be a validator. I hired a guy to do the validation, the validating. It was way over my head. I have no idea what he was doing. I was getting 6, 7, 8% payout. And when, I had a 9-bagger in it, So I sold it in January. So
Okay.
I sold my Ethereum in January. It's kind of chopped around since. My understanding of Bitcoin and Ethereum and everything that's on the Ethereum platform and everything that's kind of like Ethereum, Solana, Bitcoin's digital gold. I'm convinced of that. The other cryptos are either imitators or software as a service replacements, right? Switching from software as a service to blockchain. So when you take a look at it that way, there's a misunderstanding on the altcoins, Ethereum in particular, that somehow it's going to be treated like Bitcoin. It's not. That's just not what it is. So Ethereum, you have to try to figure out how much money will they actually make replacing software as a service and validating transactions and tokenizing everything. And the answer is less than what the software as a service companies make, because the whole point of the blockchain is to be cheaper.
Right.
So, we'll see. I'm not confident that with quantum computing coming, the blockchains are going to develop. Maybe they do, maybe they don't. I know Robinhood is out there pushing it, but if you go to Perplexity, that's the one I use, AI I use, and you go into their reasoning section and you say, how can I use quantum computing to hack Ethereum? And then how do I defend myself from it? And how do I hack Bitcoin? And how do I defend myself from it? What you find out is that quantum computing, as it gets better, can probably hack a lot of stuff. So then you need more security. And the security of the blockchains, just because it's 256 bits or whatever it is, against quantum computing, it's not going to matter. Mm-hmm. So I'm out because I don't know what the future is going to be there.
Okay.
Not because there's not a huge opportunity. There might be, but I'm not smart enough to figure it out.
And Ron Williams coming in saying good morning to everybody. Yeah, good morning, Ron. But let me push back a little bit, Kirk. I mean, I'm in the Bitcoin space. I'm in as a speaker for Bitcoin, and I go to conferences, and I hear about. I was just on Roxham TV. I was asked the exact same question about quantum computing, and as you know, I'm in the space as well as fintech. As a pioneer, I look at when people say quantum computing is going to crack Bitcoin. By that time, the blockchain is going to be so big that I don't know that quantum can keep up. Are we looking at Moore's law here in some situations where quantum is going to pass up Bitcoin?
I don't know.
Okay.
I have my Bitcoin not in a place where it can get hacked, right? I have it. I have it on a drive. So I've got 7 figures worth of Bitcoin on a drive, and that's where I'm going to leave it. Now, for trading Bitcoin, I use iBit. Okay. I think that's the easiest way to do it. It's in and out. You're protected by an exchange. I do think that if you want to own Bitcoin forever, buy it and then put it in cold storage. And if you want to trade it, I think iBit is the way to go. I just happen to be out of a trading position right now. I imagine I'm back in because if I'm right and they do quantitative easing because the debt's going to require it, right, to the moon, right? So to the moon. I've been saying that Bitcoin would go to 300,000 since people were saying it would go to 100. Yeah. So I stand by that. It goes to 300,000, and they might spike it. They might spike it way higher.
And I'm still on my premise that we're going to 250,000. I'm with Tom Lee on this. I think we go to 250,000. I don't think it's this year, but I think it is sometime early part of next year.
Or the year after, soon enough.
Okay, yeah, soon. And I mean, listen, if I can get a 50%, 100% return, I'm okay with that, right? Thanks.
When people tell me that they don't want to wait a year or two to double their money, as a guy who my side hustle is private equity,
right?
When I hear people say that, I'm just like, my God, what are you thinking? If you can double your money every 2 or 3 years, you're a rock star.
Right.
So, whatever. Yes, I would be very happy to double my money by the end of the Trump administration.
Oh, okay. Well, that's good. That's good to know. Okay, let's get to it. You just mentioned the Trump administration. When we look at the markets in general, the one thing that I always say is that the market's like one thing, and that's certainty. And it seems that uncertainty has been the common theme in the markets right now, whether that's geopolitical, whether that's Ukraine, whether that is China, trade deals, Besant, Fed Chair Powell. I mean, there is a plethora of things to talk about when it comes to this chaos theory that we continue to hear. Is it too much for the market? Because the market seems to not discount it right now, and they're still going north. I don't, to explain to me what the thought process behind all this is.
Oh man,
It's a lot to unpack.
Wow. Here. Read the encyclopedia to me. I think that the tariffs are the misdirection. I don't think that that's the number one story. I think that it's getting the press. I think the media likes to talk about it. I think that people like to tweet about it, or whatever it's called on X that you do anymore. Is it still called a tweet? But the idea that the tariffs are the number one thing, I think it's second derivative that you have to be concerned about. If other countries, Europe and Japan in particular, and South Korea now, if they decide that they don't want to buy quite as many U.S. treasuries, they really put the screws to us, especially at a time when, for the last 5 years, we've been shortening duration. Really, during COVID, we lengthened the duration on the treasuries, but since then we've shortened them. And Janet Yellen did it. Now Scott Bessent is doing it. Donald Trump, a week ago, 2 weeks ago, said that he'd be okay just doing 90-day, notes, and not extending anything until he got a chance, which I think is going to take an act of Congress. So I think that the debt play out, whatever it's going to be, is the thing that people have to watch. And if we can't finance our debts cheaper, Jeffrey Gundlach is saying, we might get 6 or 7% on the long end of the curve. That would drive TLT down into the 50s or 60s. At that point, it's a no-brainer to buy it. Right now, I think it's a hard trade. But if we get 6 or 7% interest rates, we're in a recession, and it's a pretty bad one. So we are at risk of the rest of the world saying, hey, we're going to not increase our debt holdings as you need us to because you have all the short-term debt coming due. And by the way, you're blowing out the deficit. I think that that's the big story. Not that the tariffs cause a little bit of inflation, because they will, but that we piss off the people who have been floating our debt and that they pull back. That's the risk.
And, one of the issues that we've been talking about with the debt is the China. And we just see some news coming out this morning on a company called MP. I'm going to put that up on our charts right now. MP is exploding to the upside about 64%. And we're seeing news that they're partnering with the U.S. Department of Defense on rare earths. We know that that's a problem, right? So more and more of the chaos theory here that's going on in this administration is moving things to us. So interestingly enough.
And this is a company I'm super familiar with.
Okay.
We bought it after the SPAC crash. I think we got it at 12, something like that. And we've traded it a couple times. I mentioned it to my subscribers a little bit under 20, just a month or two ago. I did not back up the truck, and I should have. But I think that now it's becoming narrative driven because the company itself, as far as rare earth metals go and the rare earths go, there's no shortage of rare earths.
Right.
It's the processing. So their processing plant it's in Texas somewhere, is a big deal, but it's a quarter of what we need. So the contract he just got this morning, I saw it on Bloomberg, is going to help them expand in conjunction with the Department of Defense. And then there's 2 other processing plants that aren't even started being built yet by other companies. So they have a huge first mover advantage. I think that they're going to be the leader in a 3, maybe 4 company North American oligopoly. So I think that they really have a bright future. However, just like a lot of other stocks, we're starting to price in 5 years from now today. So if the market becomes volatile, then this probably, takes a big step down, which you'd want to buy. So you can ride the trend now for sure. But at some point, the market exhales, this one gets beat up, and then people who weren't in get their shot. So I really like this company. It's the only good thing Chanos has ever done, in my opinion. So I'm not a big Chanos guy. I think that he just talks and talks and talks and lets people throw money at him, and then he takes a skim. But this company is super important. It's what will give us leverage with China. I mean, there's just no doubt that this is what we need. And even though I'm not a beat up on Biden guy, I mean, I think he was past it. But I think that this is a company that not 4 years ago, not 8 years ago, but over a decade ago, when it was still Molly Corp, right? Because Mountain Pass is Molly Corp and went bankrupt, and then Chanos pulled it out, which was brilliant. This company should have gotten this contract over a decade ago. It's just so stupid that the government wasn't looking forward way back when.
And we look at other commodities around the world, and not just rare earths here, but oil continues to slip here too as well. Kirk, again down another 2% here on the futures here, spot month here. When you look at the world going forward, I guess now, and solar being pulled back a little bit, and moving into, when you say rare earths, that means TB production, right? That means things that go into new cars that are hybrids. Rare earths go into those kind of things. Where do you see us as a world moving to? Is it AI? Is it quantum computing? Solar, wind, all these fun things that we've all been talking about. But when we're looking at alpha in general, what is the sector that you are mostly interested in?
I think there's two. I think that companies that use AI effectively are going to be in that sweet spot of increasing margins, so that they can just keep growing their earnings per share. So I think industrial companies that use AI well are a good spot. I think that the EV narrative is going to change dramatically in about 2 or 3 years. And it's not going to be pure EVs, the EREV, the extended range EV with some sort of a generator on board, and the new batteries from a company like Enovix, and I'm sure there'll be competitors. There are any number of companies that are going to compete with Tesla. So I've actually been shorting Tesla on and off now for 2.5, 3 years.
Oh, you have been?
Yeah, I owned Tesla back in 2015, 16, and I made a lot of money on Tesla to the bull side, but that narrative got so stupid with the robo-taxis and Optimus and everything else that at the end of 2021, it was a stock that I sold, and it's actually one of the ones that I shorted. I only shorted a few stocks. I've shorted Supermicro. I've shorted Tesla, because sometimes they get spiked so high that when there's no new money to chase it, right? There's no more FOMO people, they have to fall. And I think that Tesla's in a lull. I probably buy it long again at some point, but the EV narrative is going to change. It's negative right now. It'll become positive again down the road, because we're going to find out that we don't like expensive oil. Because what do we know about oil? It's cyclical. It's cheap now. It's not going to stay cheap. And we better get off our oil addiction, or we're in big trouble down the road. And I think the market's already moving. And I don't think the government policy matters all that much in the long run. It changes the timeline a little bit. So
Yeah, and you talk about the bullishness right now that you're still seeing it. The AAII numbers just came out a few seconds ago. What direction do AAII members think of the stock market in the next 6 months? It's 41% bullish, still 35.6% bearish. That number is ticking up a bit on the bearish side, and the neutral side going a little bit up to the upside too as well.
Yeah, I've never put a lot of faith in AAII. I don't think the correlations are that strong.
Okay.
And it is kind of a boomer-driven sentiment index.
Yep.
The reality is that the millennials drive the market now. They are the money at the margin. They've grown their net worth from 2% of total equities to about 8%. So millennials have quadrupled their net worth over the last decade. So, remember Econ 101. What changes price? It's the last buyer or seller, right? And the millennials are the ones who are in their peak earnings years or entering. They're the ones driving the market. And I think that is an important lesson. Goes back to what you asked. If the millennials like something, it has a chance to go up. If the millennials hate something, run like hell, because they're the ones that are deciding what to buy. And we know that the boomers are going to trickle out. Pensions are no longer in net additions, right? Pensions are starting to dribble out money.
That's right.
And that means that they're selling their equities. They're selling their Altria, their Exxon, whatever it is they own. And there's just very little demand for 400 out of the 500 stocks on the S&P 500. You better be in the 100 that the millennials like. And so I think that is, again, those industries that benefit from AI I like. I do really like solar long term. I think that Musk is right about that. We need to go 80% solar eventually, but that might take a decade or two. And then in the meantime, maybe we finally figure out nuclear without creating the waste. The dream, and I studied this in college, the dream of nuclear, of small modular reactors, right? Because we've had them for a long time. The idea was that they would become so efficient that the waste, the physical material waste, would be so small that you could put it in a milk jug and drop it to the bottom of a swimming pool, and that would be enough shielding. And that's not what's happened. I mean, the reactors are small, but the safety and the waste, they haven't really improved that much. And that's the thing that they've been working on for 30 years. So that the narrative of nuclear, I always counter with, do you want one in your backyard? And you're just not going to get around NIMBY until these things are so safe that nobody is scared of them anymore. And we are decades away from that.
Yeah. So right now, news came in. Coinbase CEO says they partner with Perplexity AI. You mentioned that already this morning that you like Perplexity, and there it is.
Perplexity is absolutely the best AI out there because they incorporate the other AIs and then they overlay it with another AI that helps you pick the best AI for for what you're asking. And yeah, I was an early adopter on Perplexity. I gave it a try and I was like, wow, this is neat.
Yeah.
And so I bought the professional edition and I was like, holy crap. If you ask the right questions and then you put it into whether it's research or whether it's reasoning, it's off the charts phenomenal. I used to build algorithms. I was a quant before being a quant was cool, back in the early 2000s. And, back, I don't even remember the language we were using. Eventually it was using Python. But what Perplexity or really any good AI can do now is if you ask it the right things, it'll get you the right information. You have to double and triple check everything because of hallucinations and it doesn't always understand what you're asking or you don't know how to ask it. But as far as programming goes, I've been screwing around with that a little bit just to see if I needed to use it. I think the answer is no.
Okay.
I just think that the algorithms change so incredibly fast that unless you have a supercomputer, you're going to have a hard time keeping up.
Right now, the market's over right now tick down 475 here. Kirk started about cutting off there. Bitcoin at 111 right now. Tesla at 301, 302 now. 10-year now set at 4.3562. So a little bit of a move here to the upside in the markets. Crude still continues to sell off here. 66.86 now. The Dixie now 97.68, still holding there below the 98 handle there. Spot gold still dropping here now, 33.22. You heard from Peter Thomas the other day saying if gold can hold above 3,300, we'll push back up. Are you a big fan of gold here anytime soon?
So back in 2018, and then I repeated myself in 2020, I said that there would be a massive bull market in gold.
Yeah.
People told me I was nuts both times. Here we are.
Yeah.
I do think gold eventually gets to 5,000 because we're going to keep printing money. I think that it's going to chop here until we get the next monetary easing. And I don't think if Powell lowers rates quarter point a few times, I don't think that moves the needle much. I think that it's going to be when we get quantitative easing, and they might not call it quantitative easing. It might be a special facility in the repo market, right?
Right.
Which they dabble in. Expirations, the banking system can't handle it. So the Fed gets in there on expirations to throw a little money at the system. And it ends up on the balance sheet.
Yeah.
But I think the big thing coming is QE. I think if you're a good trader and you can grind out gains until you see the spot where we're going to have a correction, and then you have the mechanisms in place, the lack of emotions, right? The system to try to scatter shot the bottom, right? Because you're never going to pick the bottom exactly. And if you do, you're lucky. But you take your 3 or 4 scales in because you can kind of see it bottoming out, and you hope that there's not one more ledge. Man, I think good traders here over the next few years can make a fortune. I mean, if I'm making a fortune, it's think about what the good traders can do.
And Coinbase now says they partner with Perplexity to provide traders with real-time trusted crypto data for better decision making. They're a little bit behind. Quasar Markets have been building that for 2 years. We've got an award-winning platform for that. So Well done, Coinbase. Welcome to the game. I don't know why they're so late in the game, but all right, we're still moving here a little bit.
Can I ask you a question?
Yeah, come on, let's go.
When the big guys start doing what you've already been doing, what's next?
Yeah, and I think the big guys are still behind, right? What I'm building is next level that they don't even know about what we're talking about. And we're taking traditional stuff that they don't have, right? That let's say Coinbase is going to have to, Coinbase had to partner with Perplexity in order to make it happen, right? In our case, we don't use one AI, and I think you mentioned it, but we use 18 different AIs, right? To make that happen. And Perplexity uses 4 main, and they use 6 completely. Of course, patented as well. But the next level of this, and I think a lot of times when you look at other AI companies trying to do the same thing, they're missing one thing, Kirk, and that's vision. They don't see the next, all they're looking at, I need to make $1 so that I can catch $1 today, so I can catch $1 tomorrow, and hope that I'm staying with the game. I want to build something that's way bigger than that, that includes all of the world data in real time, and not just, what the AI can hallucinate. I don't want to look at the past. I don't want to just take Edgar database and Fred databases, which we already have all of that, as you know, but databases that are also pulling from other things in order to create that narrative that you need. You've made 4 or 5 narratives today that you said why you've invested in things. That's the key to investing, right? Is that I always say it's the mispricing of pricing. Why do we buy or sell something? It's because we think the price is wrong. And how do you get the next pricing is based on the next narrative. And I want to have the narrative before the narrative becomes the narrative. I want to understand that narrative. In your case, you said you were buying the asset gold because you think that they were going to continue to print, and you knew that, and that was not. That's a very smart move. Same thing, but I want to know why they're going to print more. I want to know why and who's going to be the player printing more, and that's why I want to do it. 99% of all AIs right now, including other companies trying to do the same thing, all do the same thing. They all use AI. For other reasons. They don't use actual databases. They hallucinate, they make up numbers, and they have to correct themselves constantly, and that makes them mistakes. And they have to change their names and everything else that they're doing, and that becomes another fall in their face, egg in their face. What I'm building and what we've won the awards on is based on the future. I want to know what it is that makes that narrative change. And if we're in that change of narrative, I want to know the change of narrative before it happens, meaning cocoa prices in Ivory Coast. I knew that those prices were going to go up 3 weeks before it happened because of weather patterns, because of geopolitical issues that were bubbling on the surface over there. I know that Russia is looking to invade Estonia. So the Russia trade here isn't going to stop. It's going to get worse. And so that's why I am actually short the market here. I think the market's a little frothy here. And so I want to make sure I understand that. So that's what we're doing here. Thanks for asking.
I think that you early in what you just said there, you touched on something that some guy in Omaha mentioned a while back. He said that there's an institutional imperative to do that day-to-day and quarter-to-quarter stuff, and it clouds their vision or just prevents them from having vision. I think that's why small business and entrepreneurship is so important. I think that's why we have an edge. For an institutional money manager to beat the S&P 500 by 2 points, that they get into the press, they get on CNBC and Bloomberg, and they're a rock star. We're beating the market, and I don't know what you're beating it by, but
64% this month.
Yeah, our position trading is, our regular retail position trading is beating the market by 10, 20 points a year, because we just do it better. And my traders, I got traders, they're sending me their reports, and they're like, I made 100% last year,
Yeah.
and I'm just like, right, because you don't have to move $1 billion.
That's
and
right.
You're not looking for a bonus. You're just trying to make money and do it in a risk managed fashion, which I do think is lost upon, way over half the people. They don't understand the risk side, but
They don't.
No, they don't. And that's why I'm not short right now, but
Okay.
I just told people ever since this rebound rally, I was like, you should be selling into it and raising cash, because for the person who's not a great trader, right, who's just shifting their asset allocation, marginally a few times a year, these are the times where your best hedge is to be at 20 or 30 or 40% cash. And I never really tell anybody to go more than 60% cash, because they're trying to be too perfect. If they can't already do it themselves, don't push them into it. But, right. And shorting's hard because it requires some precision. I do hedge. I will tell you, I've been starting to buy some volatility.
Yes.
And I think that, I don't know, I think I'm going to get a spike. I have a hard time thinking that between now and the end of the year, I don't get a spike in volatility and make 30, 40, 50, maybe 100% of my money. I'd be shocked. So do you think that, are you seeing that volatility is kind of like the start of 2018, where, right, the sell vol trade suddenly blew up?
Yeah, I mean, we talked about that a couple of days ago with Scott Bauer talking, and for those of you who don't know, I'm still trading Tesla. While Kirk was talking, I'm sorry, everybody, I bought Tesla and just sold it, a couple thousand shares there, for $3 move. Yeah, I mean, Kirk, let's be very honest here that Scott has a very good point. He always says, buy volatility when you can, not when you have to, right? And I think that's what you're doing. You're buying it now when you can, and it's getting cheaper. And look, there's several ways of buying volatility. You can buy the VIX futures, you can buy the VXX, you can do all kinds of things. But we were looking at specifically, and I can pull that up for people if you would like to see that.
Yeah, I've been selling puts on VIX.
Okay, there you go.
Collect the premium, and if it gets assigned to me in a few weeks, I'm okay.
Then you own it. Yeah, I like that. That's a very good move. I like that. Let me just pull up VXX for everybody here. Share my screen. There you go. And if you pull up a daily chart, you can see we're getting back into those doldrums back in March of last year. And of course, we always say that, anything in the VIX itself. There you go. Anything under 16, right? For me is a buy.
Yeah, if you stretch that back to 2018, at the very end of 2017 and start of 2018, VIX got down to 10.
Right.
I don't see that happening again. to me, the demarcation zone is 15 to 12.
Yeah.
If it gets to 12, man, I'm backing up the truck.
Yeah. And I always say anything under 16 to me is a buy, correct? That's how I feel about it. Yeah. And for what Kirk is saying is when you see those spikes, they spike, right? And it's a chase, right? For those of you who don't understand that the SIBO, the VIX pit is right to the right. If you're facing the actual S&P pit to the right, and they know exactly what's happening on the S&P pit because they're right next to the pit. So the chase happens not only just from retail and not only from institutions, but it happens from the traders right on the floor because they're right next to each other. So this is why those spikes happen. And there's the spike he's talking about in 2018 when he was saying, hey, look how cheap it got, and kaboom, kaboom. So it's like buying insurance, right? For yourself, Kirk.
Yeah, and you know what's fun about that, being an old timer now. I mean, I feel like a kid, but I'm 55 and I've been doing this 30 years. Some of this is remnants of the turtle traders.
Ooh.
You know, those 8-day periods, right? Those 8-day periods where stuff just goes bam in one direction or the other, and then it turns into, can turn into 4 weeks or 8 weeks. But those 8-day periods, my main trader uses the 8-day period a lot, and it is mind-blowing how often it happens that an 8-day period is really what you should have been focused on. And
and their breakout periods are 20 and 55-day breakouts. Is that correct?
For the VIX?
No, for turtle trades.
Turtle traders. Yeah, they had. It depends on which, if it's Sakota, or it depends which guy you're reading. But yeah, 8 days was one of them. 20 days. They did the month over month. So it depends on if they were looking for reversals. But normally they were trend traders. They mainly did trend trading before people understood what it was.
And what's interesting is, and you say that, and what's cool about it is, to me, is that turtle trading. And I'm glad you mentioned that, because I have been thinking about that myself. But the turtle trading does very well in this kind of time frame when you have this choppiness, right?
Yep. Yeah. If you're a shorter term trader, and again, I'm more of a position trader, but if you are, if you're trading overnight or week to week, some of this short-term trend stuff, it just pays and pays and pays, because again, the big guys are slow to move. When they do move, it's a big dollar amount, so that if you're already positioned when that happens, right, because you saw it a day or two early, and you're not going to beat Ken Griffin in there because he cheats. You're not going to beat Citadel, but you could beat almost everybody else, right? Because it's just the nature of the way the money flow happens, and whose supercomputer sees it a few seconds early. It is amazing to me that so many people try to beat the house.
Yeah.
Right. I mean, it's like people who say, "Oh, I'm a good blackjack player." Sure you are.
Yeah,
Sure you are. But I think that the small guys like us, the numbers prove it, that if you do what you do best over and over and over again, right? The Mark Cuban thing, just keep doing it until it doesn't work anymore.
Right.
I think that is the way to go, and that's that as a retail guy, right? I manage OPM, other people's money. I'm regulated.
Yep.
There are certain things that I can do in my account, and I can talk about to self-directed investors. But if I did them in even an accredited account, and it went wrong, and somebody complained, the regulator is going to take their side every time. So I gotta cover my ass. Yeah. So I think that if you're a trader and you take the time to learn some of these techniques and understand what really underlies the money flows in the market, just measuring supply and demand of securities, right? I mean, it's why some of the micro caps that get shorted, even though they might be great companies, and I'm in one now that's starting to break out, the shorts.
You want to tell us which one it is, Kirk?
Yeah, it's a menace. I mean, I actually have a chart if you want,
Yeah,
go ahead and pull up AMTX.
Gotcha.
So it bottomed a couple months ago. This is just a refinery company that has had all sorts of problems with regulations. And finally, the one big beautiful bill extended some of their tax incentives. California finally got things right after talking about it for 5 years. Suddenly, they have tax credits from both California and the federal government for biofuels. Also, they're about to IPO because they have a refinery in California, and they also have the biggest biofuels refinery in India that they're about to IPO 10 to 20% of it and repatriate a whole bunch of cash. So this is a stock where, because they had to run the ATM to pay the bills, because there was 3 years of regulatory stupidity, they were diluting, and that allowed the quants to say, oh, we can short the shit out of this because they keep printing the shares that we need to cover. Well, I believe, if you take a look at the last couple of weeks, I believe that they stopped doing the ATM, and we won't know for about a month. But I don't think that they're printing shares right now, and I think that that is on the verge of a breakout. This is a company that just on their renewable natural gas business in California, which is hooked right into the pipeline, I think they're going to be profitable by the third or fourth quarter. So this is a company that's
a buyout opportunity, right? I mean, that's a takeover situation here, then, right?
It's pretty closely held. Management owns over 10% of the company, and then their private equity partner, who has been helping them through this period, owns another big hunk of the company. Could the company get bought out? Yeah, I've interviewed the CEO twice, and I talked to him here and there. I don't think he'd be willing to sell the company for under $10 billion. The net asset value minus debt and preferred, just of the hard assets, is way over $1 billion.
Okay.
So this company should be trading at $1 billion market cap right now.
That's a 5x from here.
It just got to 200 million. And if the business is worth anything, it's probably 3 billion. Woo. Now, they also have carbon capture. That's the wild card. I don't know if carbon capture is actually a big thing in the future. The fossil fuel industry wants it to be because they can clean up the mess they made and get paid for it. So that's why carbon capture is out there. That's why Warren Buffett is buying Occidental. Right. Carbon capture might be something that in 5 or 10 years we go, oh shit, we better clean this up. I don't think we've had the aha moment on climate change yet. I think that's coming. But regardless, big oil tends to get what big oil wants. So if carbon capture is a big thing, then this can be an S&P 500 stock. It can get that big. But I'd say 3 billion-ish is a fair value right now. And then 20, 30 billion if carbon capture is a big thing. It's a pretty good bet. I don't think there's much downside now that they're on the verge of profitability. And the upside is asymmetric, right? It's either big, bigger, or wow.
All right, so let's switch gears a little bit. And I know you like to gamble, so let's do it. Vegas. I was in Vegas for the Bitcoin conference myself, and the strip seems to be slowing down a bit. Are you seeing that yourself?
So what's funny is for years I've talked about the Vegas indicator, my personal Vegas indicator. And I mentioned, because I was there in February as well as a couple of weeks ago for the World Series of Poker, Vegas is slower this year than it was last year, than it was the year before. Is it slow? It's not slow. It's just off of the peak revenge spending.
Right.
So I think that most, Caesars, I've been in and out of Caesars for a very long time, CZR. MGM, I've been in and out of in the past. I haven't been focusing on it. I kind of follow along with Carl Icahn over at Caesars. I've made a couple good trades in it. I think that you're probably going to see a correction in these stocks at some point. and then even more so. And I think you want to buy them when that happens, because remember, the gambling companies have offloaded all their real estate debt to Vici, and when they start the next uptick, I mean, these are classic stocks, the two that you have up right now,
Right.
that when they dive, you buy them.
Right.
And now that they've been in the process of deleveraging to the real estate, which, honestly, it's so freaking hot in places like Las Vegas and Phoenix.
It is.
I think something bad is coming at some point. So I think it's smart that they get out in front of it. And we're talking years down the road, but they're improving their balance sheets. And, another one to look at is Win. So I'm pretty into the Vegas thing. Win might get bought by Golden Nugget at some point.
Ooh, that's interesting.
Tillman Fertitta is the second biggest shareholder in Win now after the widow.
Correct.
And actually, is Steve Wynn even dead? Yeah, he died, right?
He died, yeah. Mm-hmm.
So Tillman Fertitta is setting up to buy it. He wanted to buy Caesars, and he couldn't fight off Carl Icahn. So when Fertitta was going to take Golden Nugget public with a SPAC in 2020, I thought, oh my God, I'm going to get in on the ground floor. And he pulled the SPAC 2 weeks before it was supposed to de-SPAC, because he was like, oh my gosh, they're spending so much money here so fast after COVID that I don't need to take it public anymore. So right. I think that Win is a very interesting stock, because I do think it's going to go through some sort of strategic merger, and then they're going to monetize the real estate. These are 5 and 10 year private equity type processes, right? They don't happen overnight.
Right.
But I think Win can get tremendously bigger. I think Caesars, as they sell off another asset or two, can really jump. MGM is nicer than Caesars right now.
It is. I do.
But I don't think that I don't think they have the strategic capability to do much better than they're doing, right? I think it's mostly priced in. But I think Caesars and Win, man, I tell you what, those are two that if I get 2022 prices again, I'm all over it. Or 2020 prices.
Yeah, and I like the Venetian. I'm pretty much, that's Apollo, right?
Yeah. And Vici owns it, and then is Apollo the private equity partner?
Correct. Yeah. So I think you got a pretty good plays there. I think actually there.
Yeah, Venetian's really just Vegas though, so you have to take a look at Vici and everything else. It is right, the old sand stuff. I think that, to me, the Venetian might be the nicest place there after Fontainebleau. I mean, if you haven't been there, I mean,
That's
my
really
gosh.
nice. Yeah,
oh my gosh. Venetian's just so nice. I don't know how scalable it is.
Right. I agree with that. And Fontainebleau being in several other places too, including Miami too as well. All right, we got about 5 minutes to the top of the hour, 7 minutes now, 6 minutes. Let's talk about it real quickly before I let you go, Kirk, because I really appreciate you being here, and I hope we'll bring you back next week or the week after. But when I'm looking at sectors in the future, and I go, okay, and earlier you said you liked rare earths. Earlier you said you liked quantum computing as a breaking the crypto, and you said, but if I was going old school like you and me, give me an old school sector that the boomers, shall we say, out there are still buying and still investing in. We know the money's coming out of the pensions. You said that, and I like that answer because correct. But they still do invest, and I know they still trade. I'm at the Villages every once in a while, and when I'm up there, someone always asks me what stock to buy.
I hope you're being very careful at the Villages. I hear that they have a couple of
I'm not going to answer that question for you. My parents live there, but I will tell you, they still, when people ask me what stock to buy, I tell them Bitcoin, right? And I've been saying that for a while, and they don't understand it. So I have to go back to the old school, and I go, well, I know you're not going to believe me, but NVIDIA has been really good. I did that, and I talked about Palantir when it was at 35, and of course now here we are.
Yeah, I bought Palantir under 10, and then I sold it at 35 to you.
Thank you. I appreciate it.
I should have held on. So I think the old school stocks are the natural gas focused oil companies.
Give me one.
Because they're not getting valued for the natural gas. So I'm in Permian Resources.
Okay.
CTR.
Yeah.
I'm also in Katera, CTRA. And I'm also in Matador, MTDR. And all three of them are Delaware Basin focused. So the Delaware is the western part of the Permian Basin.
Yep.
So if anybody's watching Landman, right, that's based in the Midland, the eastern part, and that's the oil-rich portion. The gassy liquids, the liquid gas, or the natural gas area, more liquefied. What is it called? Liquefied natural gas, whatever it's called. Is the Delaware Basin over pushing towards New Mexico. Those companies over there have been waiting for a natural gas rally for years. And, they started to get it the last year or so. Texas has a new loan program, and they're building out natural gas power plants for the AI. So natural gas supply is relatively constant. We have to remember that in the United States, it's very associated with oil production. So unless you're in the Marcellus, in the Utica, out east, the rest of the gas in the country is produced generally as a byproduct of drilling for oil. Well, oil rigs are flat down over the last couple of years. And so we're basically at peak oil production in the United States. I mean, it might wiggle around a little bit. So that means that natural gas production is also near peak. If the supply is relatively constant, and I think it will be for 5 to 10 years, and that's what the private equity guys are saying, and they're generally the smartest guys in the room, that means that the price of natural gas is going to be firmed up because of the LNG exports, because of the demand for AI, because of what they just put into the big, beautiful bill, which I've called different names, which we won't get into. But I think that natural gas investments are the way to go. Now, the natural gas pure plays are pretty fully valued, right? Your Antero and things like that. But the oil companies to produce a high percentage of natural gas, right? 50-ish%, like Permian, like Matador, like Katera, they're all in great shape. So Matador is run by a legend in the industry, Joe Foran. I've met him. MTDR. They've been the stock has done well over the last several years. And if you make that chart 5 years, you'll see the curve. He's brilliant. And at the oil conference, the Hard Energy Oil Conference last year, he said, look, there's two things you do with your oil and gas companies now. You ride them out forever or you sell them. There's no in between. And Matador, if Exxon comes by and says we want to buy Matador and they can write the check, they might get bought. Because I think that he would take the check at this point and call it a life. Katera has 3 major assets: Texas, Oklahoma, and out in the Marcellus. They could sell 2 out of 3 of those pieces. They're already just ridiculous balance sheet, and they're set up by financial guys to make strategic transactions. I think they sell Oklahoma, and all of a sudden this is a company that CTRA ends up, I think it's probably worth 50-ish, right? And it's not a grand slam stock, but another one of these things you could probably roughly double your money in the next several years. Permian Resources, PR, is run by a private equity guy and an oil guy who have just, if you study the history of this company, these guys are amazing managers. And you talk about building a company from the ground up, it is ridiculous. And all these companies pay a dividend. They all kick out special dividends. They're all buying back shares. So if they happen to get bought out by Exxon and Chevron because they need to find stuff in the Delaware, I do think the Delaware is where you're going to see sales. Chevron's out there, so I don't see really any downside in these companies, right? So you have either great income producers, and because it's oil and gas, you can sell options on it because there's enough volatility. And they might get bought out, and they might just grind higher for a long period of time because there's not enough natural gas. And we're not building solar fast enough, and we're not building nuclear fast enough. And wind, the problem with wind isn't just that it's ugly. It's that it runs into physical constraints, right? There are physics that are against wind, right? The friction. So wind is really the thing that we should just kind of walk away from because it's not efficient. But solar is super efficient. During the daytime, solar is by far the cheapest energy. It's just when you attach a battery that it gets, expensive. Right. So we're figuring out batteries. Enovix, ENVX. They're not a chemistry company. They actually came up with a new architecture for batteries, for lithium batteries, using a different anode and a different shape, right? Batteries are normally coiled. These guys came up with a different shape, kind of a square, and they're putting them in cars and eyeglasses and all sorts of devices. The problem is they're mainly in Malaysia, right? So tariffs, but they have the ability to license out their technology to all these battery plants that got stalled, right? So Ford and GM and everybody else started battery plants here, Tesla, and then they had to put them on hold because they didn't know which technology to use. They ran into all sorts of supply chain issues. Now all of a sudden, if they just license this technology from Enovix, this is a stock that can go to 100. Whew. So, easily 100. That's how undervalued some of these small and mid caps are because the narrative hasn't been written yet by the hedge funds who feed it to the Discord rooms, who turn out the tweeting armies and drive up the narrative. Enovix can easily be 30, 40, $50 billion company easily. Sure. That's how big that market is, right? So you look at total addressable market, TAM, and then do they have an edge? Can they be part of an oligopoly? I love oligopolies, right? I mean, Buffett loves monopolies. I think that's hard to find those, but oligopolies, right? Tightly controlled markets by leaders, right? I mean, take a look at cloud. If you just own Google, Amazon, Microsoft, and now Oracle over the last decade, you did pretty well. So, get into gigantic oligopolies. And I think that energy storage is going to end up being gigantic. Yeah, I think we're in the first or second inning. We're out of batting practice, but we're early in the game.
All right. Well, Kirk Spano, fundamentaltrends.com. I'll put that up there so everybody, so make sure you give him look him up because I think when you look at trends, a lot of times people are just following trends, and you already know the trends are going in the future. We've talked about several of them: oil and gas, obviously, quantum computing, crypto. We hit the whole gamut today, and that's just who Kirk Spano is. He's also got a subscription-based investment coaching and shows you model portfolios. I love that, Kirk. So thank you so much for being part of Quasar Markets Live today, and I'll have you back here in a couple weeks, man.
This sounds great. Thanks for having me.
Bye, everybody.